So what I think is hilarious is you look at like a 30-year mortgage. Pretty normal product, actually. I would say that on average, most people have interacted with a 30-year mortgage. You have taken one out yourself. You've lived in somebody else's house who had one. Like, it's a pretty common thing to inform some portion of your life. Do you know what drives 30-year mortgage rates? Let me tell you what doesn't drive 30-year mortgage rates: the interest rate environment. The only thing that drives 30-year mortgage rates is the open market. It's 30 years. There is no one in the world who can give you a confident opinion about what interest rates are going to do for the next 30 years. And if they do, they're actually an idiot. If you can tell me with confidence that you know what's going to happen for interest rates over the next 30 years, you are literally dumb as shit. Nobody knows what's going to happen. Nobody knows what's going to happen. But we take all these 30-year loans like we're going to pay them off over the course of 30 years, 360 payments. You know what informs the interest rate you get? The market. What is the market? It's all the other banks that want to lend you money, and they get to fight over who's going to give you the best rate. One of the things they consider is what are one-night interest rates right now. That's one thing. There's a whole bunch of other things. I don't think I have enough energy to explain it. Interest rates went down. The 10-year treasury went up. Which one is right? I don't know. They're both the same thing. Or they're both different things. They both happened at the same time. They're both real. Interest rates went down. I guess for the average person, what that actually practically means is like, you know, the interest you're making on your savings account went down a little bit. That's something. I guess that's notable, but like, let's think about it practically. So if you had a top of the line savings account and a month ago it was paying you 5%, and now all of a sudden interest rates get cut and you have one that's paying 4.5%, it's 0.5% difference over the course of a year. Let's just math. Okay. Math. You have $100,000 in cash. Is that a lot of cash or a little cash? I have no idea, but it's an easy number for me to use. Okay, let's make it $10,000. $10,000 in cash in the bank at 5%. That's $500 a year. $500 a year, that's $40 a month. Don't argue. It's $40 a month. Shut up. I know what you're thinking. It's $40 a month. Now it went from $500 a year to $450 a year because interest rates got cut. So your 5% savings account is now 4.5%. It's $450 a year. Okay, ready for my math? Still $40 a month. Did it change your life? No. Just stop. Okay. I can't. I'm just done with the TikTok influencers who have $10,000 in their savings account telling us that we should change the way that we live our lives because we had a 50 basis point interest rate cut. It's just impractical for most people. Mortgage rates have been coming down for like 3 months. 3 months before this interest rate cut. You know why? Because the market is what informs mortgage rates. It just is. It's a 30-year product. It's just how it works, okay? I'm sorry. If you can't understand that, I don't know what to tell you. Should you pay it off? I don't know. Depends. Here's the thing. When you have a mortgage, most of the time, that monthly payment is fixed. So, on average, that means it changes every month by $0. That's your mortgage payment. Now, there's other things. I'm not even going to talk about those. Taxes, insurance, which is insane, repairs, etc. Some of that stuff's in your mortgage. Some of it's not. Some of it could be. Some of it doesn't have to be. Whatever. But your principal and interest payment, that doesn't change. Unless you have one of these adjustable rate mortgages, I don't want to deal with exceptions. Your principal and interest rate payment doesn't change. On average, over 30 years, you make more money. Now, people live in houses for like not very long anymore. I don't know. 4 years. What's the average? Okay, Google, ready? How long do people live in houses on average?
On the website thezebra.com,
Whoa.
they say 16
Can you hear that?
lived in
I said, okay, Google, and then typical U.S. homeowner spends 12.3 years in their home. Okay, I'm going to do something. So let's just pretend that you have a 30-year mortgage and, okay, I'm going to look up current interest rates. I'm not going to make this up, 6%. Okay, calculate. After 12 years, you would have paid off, dun, 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 that's almost halfway into your loan. 30-year mortgage is halfway is 15 years. So 12 years, it's 40%. 40% the way into your loan. You would have paid off 20% of your mortgage at that point in time on 6%. Did you know that? Well, that's just math. So if you live in your house for anything less than 12 years, that means you would have paid off something less than 20%. Okay, let me do like 9% really quick, just for giggles. So if you have a 9% rate, mind you, 9% is 50% more than 6%. Again, that's just math, but maybe that's another podcast. Okay. 9% interest rate, 12 years, you would have paid off 14%, 15% of your mortgage after 12 years. Is that meaningfully different or not? I don't know. I think the thing that people need to realize is when you live in a house for something less than, like, let's say even half the mortgage life, 15 years, like, you're paying off meaningfully less than half of the balance. That means that from a debt pay down perspective, interest rates, the change is going to be, let's say, somewhat more marginal than people think. Now, the difference between 3 and 6 is a lot, and the difference between 6 and 9 is a lot, and there's a lot of forces that make interest rates operate in those windows. But pretty much all of the appreciation you're going to find in a house, almost exclusively for most people, because they don't live in their house very long, is from market change, price change, the value of your house changing, going up in price. The thing that interest rates are going to inform a lot are your monthly payment. So a more practical question for most people, rather than should I pay it off, because the reality is most people can't. It's just factually correct. Should you pay off your mortgage? Yeah, if it reduces your monthly payment to the point that it makes sense, maybe.